Our assessment technically is that silver is about to make a quantum leap to a new reality.
If it goes up 80% like gold did in 18 months, we'll be talking $90 silver by 2027.
Yeah, I don't have a black mask. If I did, I'd put it on and I'd say, hi-ho, silver away.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce silver Valcambi bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican Silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce gold Valcambi bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And with us today, some of our top guests, David Morgan, Craig Hemke, and Michael Oliver here to discuss silver breaking the historic $50 level into all-time highs. Since then, we're recording this at 1 p.m. Eastern. Today, silver is down more than $2. It broke above 51, and now is, some markets you look at, some of the exchanges, you'll see it under 49 at the moment. So I guess starting with David is a historic moment, I think, in the silver market. We've all been tracking this. Any thoughts from you?
Several. I've tried not to make this like a long speech, but first of all, Elijah, thank you for bringing us all together. I think two heads are better than one, three may be better. 27 might be too many. Deepest respect for Michael Oliver. You're always learning, and I think he's got the best handle on momentum of anybody, and I've looked at a lot of guys over my 40-plus years. Craig, you just keep pounding the drum, and a lot of what you said has been true, so knowing you for years. Remember meeting you the first time, you used to wear the hat. So anyway, I will start. I said... First of all, I want to agree with Michael. I think we're going to get through 50, and I think we're going to look at it in the dust at some point. But to be consistent, I have said over and over, as you know, that I thought we might stall out at 50 because it's such a psychological barrier. And we saw one increase in margin requirements, and I noted that. I think I retweeted it to Craig, if I remember correctly. And this is what they do. I mean, they keep increasing margin requirements until you got to put up basically the cash cost for the commodity, and then you see the market fall off. We're getting that direction. I'm not surprised. I got let's say, I won't say angry, but a agitated member this morning. First thing I get up, I haven't even had my coffee. What the hell's wrong, David? Silver's at 51 and every one of my stocks is down. What I said was, look, normally the shares lead the metal. And this is the pros taking profits in the shares and selling it off. And it's like they get the memo ahead of everybody else. So I don't want to put on the foil hat too much. There are times where these markets do what they do because of the setup. And this is one of those moments. And I do want to show a chart later on, Elijah, but I just want to hand it over to my colleagues and hear them. And I'm not making this an I'm a right and, whatever, because I want to see a couple more days of trading. But I'm not shocked that we hit that magic number and all of a sudden the big sell-off. So I'll leave it at that. Thank you.
I guess turning to Michael here, your perspective on what we've been seeing. You've been very accurate as when we've had you on. I mean, it seems like you called really the breakout above it was at 36 or so. You said it was, going to, the sky's the limit from here. Your perspective of what we're seeing today, breaking through $51, but now below 49.
Yeah, well, in the futures, we watch the front month contract. Now, I know spot is above the front month contract. And it got to 51 and dropped back under 50 slightly. So it made new highs. Futures did not. They stopped at 49.76, a couple cents below $50. So some guy said, I'm going to sell the nearby future just below 50 and risk a nickel. Okay, make a dime. Okay, well, they're getting a sell-off here. Fine. Okay, I think it's idiot selling. Our assessment technically is that silver is about to make a quantum leap to a new reality. It's not in a bull trend. It's in a total shift phase in its price zone that it's lived in for 50 years. 50 highs, basically 20 is sort of a low, and to just live there forever. Go to the Federal Reserve of St. Louis, Fred, and you can punch up charts like lead or zinc and go back in price history. And they'll have a monthly close-only chart going back to the 1990s anyway. And you'll see that they lived in a zone for quite a few, decade and a half or so, both those base metals. And in 2006, very late that year, silver and gold were already in a bull trend at that point. These metals took off and tripled in value, base metals. And since then, they've come back down, but they've never come back down into that prior zone of reality. They live in a new zone of reality that is double or more on average for the last 10, 15 years of what it used to be back in the 1990s to 2000. Well, silver's still in that first range, okay, where it was from the 1979-80 high, the 2011 high. Gold's above the 2011 high, copper's above the 2011 high, and silver's still contained here? Give me a break, okay. We know the fundamentals. I don't try to keep up with them too intimately because that's not what we do. But the technicals argue to us that we're about to blast out of this range and not just have another nice leg up, but move into a price zone of new reality. I'm betting it's well over 100. It may be between 100 and 200. And I think a lot of that's going to occur in a handful of months, 5 to 6 months. We're waiting on one trigger. That's a spread relationship between gold and silver. And we run momentum studies of it as well. Now, everybody looks at the ratio, the 80, 70 to 1 type thing. We do it a different way. We divide silver to gold, express it as a percent. And right now, silver is about 1.2% of the price of an ounce of gold. That's extremely low going back 50 years. It's been over 2%. In 21 of the past 50 years, silver has reached 2% of the price of gold. And some of those weren't even bull market years. Okay, so we're very submerged, but there is a very clear structure on the spread charts. When you plot the spread chart, silver versus gold, there is a pending triple top breakout at 1.31%. So we're not far below there. When we cross that level, the same thing happened to its spread versus gold in 1979 and in the fall of 2010, just before silver went totally vertical. It went from like 20-something bucks to 50. Boom. All in a handful of months. The spread was the tell. And we're watching that. We think it's going to break through. And our momentum of the spread suggested even a lower level than that 1.31%, which is a prior double top. Will break out before that. And when we do, when that spread breaks out, I'm putting the seatbelt on. I think silver is the place to be for the next 2 quarters, and the move could be enormous. And you look back and say, oh, now I understand why. Supply demand's been tight, et cetera, et cetera. Market has been an irrational level for too long compared to other metals, for example, that have done the same thing, had a tantrum and moved to a new reality. Anyway, that's my major comment.
Craig, I know you've been tracking this on your website for over a decade here, waiting for this moment of $50 silver. What's your take of what's happening right now?
Well, first, what a pleasure to be included with 2 guys that I greatly respect. And if anything, you know what, I'll touch upon a little bit about what they both said and maybe accentuate a little bit on, David's point about the mining shares. With 90% of New York Stock Exchange volume these days being high-frequency trading computers, whatever it is on a daily basis, 80, 90%, any day that you get where the metals are falling while the New York Stock Exchange is open, you get pressure on the mining shares. It just seems to be how the algos are programmed. And the gold's been falling since exactly 9:30 Eastern this morning. And so you get this big washout in the mining shares. It's not like the computers look at it and go, gosh, silver's $49. No, that's not how they work. They're just simply tracking the metals intraday. Anyway, and then to Michael's point, the most curious thing about where we've finished up here today, to get brought us to this point, is this, I've never before seen backwardation on the futures board. At one point this morning, the spot price was higher than every silver contract all the way out to September of next year. And at one point, more than $2 higher than the current front month, December. It's not something we've seen in gold. Gold has maintained about what you'd expect, about a $20 contango or premium to spot. But this big inversion, this backwardation, whatever you want to call it, in silver is telling us something. A lot of people think it's an evaporation of the free float available physical in London. We'll see. But that's something that we didn't have in 2011. And so then kind of adding this on to the last thing I wanted to say, Elijah, I think when last time we spoke, I started thinking about late August, early September, and I think we probably discussed this, that silver was going to go up to $48 to $50, but then stall for some of the reasons that Michael just mentioned, and David has mentioned, going up, great resistance at that level because it's been there a couple times before. But to me, the situation is not analogous to 2011 or 1980. It's analogous to gold back in December of 2023. And today's price action looks like the action in gold on the 1st of December. Gold had rallied on that Friday, the last day of November, and on the Sunday night, December the 1st, it took off in the first half hour and broke out above, the previous highs above 2100, and then was massively reversed. And the selling continued all day on Monday, and you had these wipeout reversal candles on the chart, and everybody threw up their hands and said, that's it. Gold can't make new all-time highs. We're going back down to the 200-day moving average, going to 1200 or going to 800, all that stuff. Gold took 90 days banging in there between, falling down to 1800, going back up to 2000 and 2100. Took 90 days banging up against her. And then once it broke out on March the 1st of 2024, it's now rallied 80%. That's, I think, analogous to what we're seeing here. Big reversals today, big, ugly candles on the chart. Every technician's going to be out there over the next couple of days saying, that's it, silver, it's dead, it tried again. Probably bang around here till the end of the year. We'll get into the fundamentally positive 26 with yield curve control, sharp rate cuts, a new Fed head, all this kind of stuff. And then I think that's the trigger to get you to what Michael just talked about, a blast through 50. If it goes up 80% like gold did in 18 months, we'll be talking $90 silver by 2027. So anyway, I tried to spit that out as quickly as I could.
I wanted to turn to David now. I know you had a chart you wanted to share, probably your comments right now.
Yeah, so this is a chart from Matt Watson. He's an analyst that does all the metals across the board based to exotics like iridium, which I know almost nothing about. So this is a chart showing silver demand, what he calls the low case. And the red line is all silver production, which means the black line, which is the mining. And the red line is mining plus recycling. And what you see from 2024 onward is that basically we're in a deficit situation based on industrial demand alone, and that we've been in a deficit for the last 4 years or thereabouts. Now, that's what Jim Dines used to call a natural corner. We've all heard about, ad nauseum, the hunts try to corner the market and all that. Well, what Dines said is there'll be a time where the market forces for industrial use only will corner the market. In other words, we won't be able to mine and recycle enough to meet the demand. Well, that's what this chart shows. Now, where I disagree with Matt honorably is the silver or gray bar on there shows investment demand. That investment demand is roughly 200 million ounces consistently from 2025 to 2050 for the next 25 years. Well, no one knows the future, but I contend that as we move into this paradigm, which is one of my main themes from day one when I learned about honest money, is that you can't print your way out of this mess, which means more and more people are going to be seeking real truth, which means real money. So those gray bars, you could double and triple them. And not to be too nitpicky, but the line at 2020 shows 200 million. That is incorrect. It should be up here, if you can see my cursor, at about 1.25. Because in that year alone, the demand for silver in quote unquote physical terms was 320 million by the ETPs. and the normal 200 million by retail for like 520 million ounces in that 1 year on investment demand. So if we can do that in 2020, we can do it in 2025. So I think this situation is, Michael and Craig have said, and many of us, that we're getting into a new paradigm. I don't like to use that lightly, and I think Michael said it best. I mean, we're in a situation where reality is going to shine through on all the naysayers like they can't believe it. I mean, we get through 60, 70, people are going to be doing the one-handed salute going, oh, I hated Morgan, or he's an idiot, and oh my God, look what's happening now. I don't have too many detractors on X right now. I'll put it there. I'll give it back to you. I'll quit sharing the screen, and that's the low case, by the way. If things go higher for AI or EVs or what have you, it'd be beyond that. So I'll just leave it there. Thank you for letting me share.
So maybe we could turn to Michael now if you have any thoughts on that chart. And I know you focus a lot on the technical side, on the momentum side. And one of the things that I love about silver right now is the fundamentals that David is showing and the technicals that you have analyzed are really pointing in exactly the same direction at the moment.
Yeah, that reality's been there for a while. We know that. Recent years where the supply demand is the way it is and demand increasing, supply is not, et cetera. And yet price hasn't responded in a real way. I mean, you think about dollar terms also. 1980, $50. In real dollar terms, where would it put us now? It's probably 250, okay? In the decay in the value of the US dollar, not relative to other currencies, but in real buying power. Even over since 2011, money supplies increased like 150%. Okay, has silver increased that much above the 2011 high? No. Okay, so there's all kinds of realities out there that we know exist. We scratch our heads and say, this is ridiculous. Okay, we do anyway. And we know when it changes, it could change in a way that is, well, we've seen it in many markets. We've been around long enough to see when a market gets overvalued for too long, it gets ridiculous. In hindsight, everybody calls it a bubble. Of course, when it was happening, nobody called it a bubble. Or a market gets suppressed for so long that people think, oh, that's a new reality. It's a piece of crap. We don't, who cares about silver anymore? And it suddenly says, I'm going to wake up. Markets make mistakes. Investors make mistakes in terms of allocation, proper pricing in relation to reality. These things happen. Markets aren't always rational. And I'm arguing that silver was irrational, especially for the last 10, 20 years, of not ever coming up above this base range high that virtually every metal in the world has done. And not silver? Oh, okay. What for? And now it's moving with gold now because it's a monetary metal. But when silver engages on the fundamentals, like the graph we just saw, it'll have its own life. And I think it's going to move to a new reality. And again, if you do a dollar conversion, $200 is not irrational whatsoever. And sometimes when markets are too irrational one way, when they correct the other way, they overcorrect. Okay, you go way beyond what the new reality might be in silver. Maybe silver's going to live in $100 to $200 range for the next 10, 20 years. But it might reach 200 and fall back to 150. You'd get my point. And there's a new reality. The technicals are arguing for that, especially the long-term momentum technicals and the spread relationship to gold. Argues that silver, just to go back to its normal reality, let's say 2% of the price of an ounce of gold, which it's been 21 of the last 50 years. You've seen it at that level. In bull markets, silver spread to gold goes above 3%. In 1980, it went to 6.5%, the price of gold. But let's say it just goes to 2%. Well, what's 2% of $4,000 gold? Okay, what if gold goes, and we've been arguing this, and does what it did twice before? It had bull markets in the last 50 years, both of which were 8-fold gains, bear low to bull high, under circumstances that are far less dramatic and earth-shaking than what we have building out there now. If gold did it again a third time, had another 8-fold move, we'd be 8,500. Well, what's 2% of that? Okay, you get my point. Silver's going to move into a new reality. This selling at 50, I love it. It tells me the idiots are still there. They stick a nickel in front of a freight train, and yeah, they got, quote, overbought situation on a short-term basis, but they don't see the larger context. And it wouldn't shock me that when we finally go through 50, we have a situation where we close one, I'm talking futures now, December futures. They're 47 something right now. They were up to just below 50 today. When they go through 50, it wouldn't shock me, and I'm not predicting, I'm just saying this would be justice. You close one day out at 49, next morning you open $3 higher, limit up or something, because force majeure, something going on, one of the fundamentals kick into gear, and suddenly you don't give these guys a chance to stop out of their short position they put on at 50. You nail them to the wall and see if they can get out. And it wouldn't shock me that that's the way it happens. So I love seeing the selling at 50 because it tells me the idiots are still there.
I did want to ask Craig about the gold-silver ratio. I was just pulling up the chart here. It looks like just when silver was hitting about the 51 level, the gold-silver ratio is breaking down below the 80 to 1 ratio. Your perspective on that ratio, and where could it be going if silver is going to come back and break decisively above the $50 level?
Well, that's kind of what Michael was just answering. He just expressed it in a different way, right? Michael, everybody calls it the ratio of 80 to 1. You're just talking about 1.2% of price, which is basically the same thing, right? And I'm in Michael's camp. I think it historically has to narrow, but that ratio is a reflection of the derivatives that we use to price this stuff. And that's why it's gotten so out of whack over the years. So will that derivative pricing scheme fail? And that's the thing that, at least as of a couple hours ago, had everybody's attention, because that spot price had so diverged from the futures price. I was watching last week when this first happened, and about 20 cents worth of backwardation, if you want to, and whatever you want to call it, where the December contract was 20 cents cheaper than spot, happened last Thursday, and it preceded about a $2 drop in the futures price. And then it happened again Sunday into Monday, and it preceded about a $1.50 drop on Tuesday. Each of those previous little 20-cent things, I watched it in real time. It happened through heavy selling of the futures contract. Today, when it widened to $2 plus, that was clearly buying of the spot. You're going to widen that thing out one or two ways, selling futures or buying spot. And you're going to narrow it by buying futures or selling spot. So it widened out today by buying a spot. And there's a lot of talk about, is there any liquidity left in London? What's the free float? Is it 150 million ounces outside of what's in the ETFs? Do the banks have that physical silver available to settle trades in that physical trading hub? There's a lot of questions about that. Is that what you're seeing? And so there's a current part of this that remains unanswered, regardless of all of the, what we see on the hourly chart and that kind of stuff. We'll see what happens from here. Like I said, I suspect we're in a consolidation phase again. Gold has been very predictable ever since it broke out back on the 1st of March of last year. It moves up 15 or 20%. It consolidates for 2, 3, 4 months, moves up 15 or 20%, consolidates 3 or 4 months. The last time it peaked on April the 22nd was a day just like today, where it traded up to 3,500 and reversed. It then consolidated for 4 months and then broke out at the end of August. And now at 4,100 this morning, that was another 15, 18%. So this is pretty predictable stuff in that regard. And that's why I don't think we're going back down, to some of the depths that, the perma bears are going to come out and discuss in the next few hours. I just, last thing I would say, even yesterday, I had 2 friends ask me, gosh, I sell my gold, it's $4,000. There's two parts to that answer. Okay, you sell it, then what are you going to do? Someone's going to give you dollars back. Do you really want those? Seriously? Unless you're promising me that on whatever dip you think is coming, you're going to buy your gold back. Gold in exchange back for dollars is not a good proposition. And the mistake that, because of the way market analysts and financial planners and everybody else thinks, we're all programmed to think in terms of equities, as if gold is a stock. right? As if, a stock can get overvalued and then their earnings deteriorate, the fundamentals of it deteriorate, all of a sudden, they got competition, whatever. And you can make a case that a stock is overvalued relative, in dollar terms, and it falls back. The gold is the gold, man. And the silver is the silver. It doesn't change. It took $1,100 to buy an ounce of gold 10 years ago. It took $2,200 to buy that very same ounce 5 years ago, and now it takes nearly $4,000 to buy. The ounce of gold is exactly the same. The ounce of silver that was $15 10 years ago and then was $25 and now is today $50 has not changed. It's the purchasing power of the dollar that's changing, and that's what will not reverse. That's the trend that is only going to continue to worsen. So is gold expensive? Is silver expensive? I don't know. On that 15-minute candlestick chart, fine. But boy, I'm pretty sure another 5 years are going to pass. And what's gold going to be then? 6,000, 7,000? I mean, like Michael said, 8,000? Yeah, probably. And we'll look back on days like this as just being, moments that we remember, and we'll laugh about.
Before we leave you all, I did want to have you guys each share your last thoughts with our viewers. It's been a wild ride, really, for the last decade or more that I've been tracking this with you, David, and Craig, and I know Michael for a couple of years now here. So it's just been a pleasure to ride this with you guys. And also, it seems like we're just kind of starting, probably. A lot of what you guys are saying is the game's only starting. So I wanted to start with David, and also for our viewers, we'll put links to all your websites in the description. TheMorganReport.com for David Morgan, OliverMSA.com for Michael Oliver, and TFMetalsReport.com for Craig Hemke. Starting with David, any last thoughts for our viewers?
Yeah, I don't have a black mask, but if I did, I'd put it on and I'd say, hi ho, silver away.
Right.
Fantastic. And any last thoughts from you, Michael?
Yeah, we're talking about money degradation. Money is gold. Dollars are pieces of paper. Ludwig von Mises said that government the only entity in the world that can make a valuable commodity like paper worthless. We ran a chart in the weekend report, not our technical stuff, just money growth, M2 chart. Went back to 2000, went back 25 years to the year 2000, and money growth has been like 4.5-fold in increase in the money supply, 4.5 times where it was then. S&P has matched that. Matched it. In other words, really not done any better than holding its buying power versus the dollar. Price of beef has matched the growth in the money supply. So a pound of beef frozen is appreciated just as much as owning the S&P since the year 2000. Gold, 16-fold since the year 2000. Okay? So if you're an investor, where's your reality? Okay? 16-fold. Money supply 4.5, S&P 4.5, gold 16-fold. That's what we're talking about.
Quite exciting times ahead. Any last thoughts from you, Craig?
Just on the short term, for people that are really curious about what has happened today and this week, keep an eye on the dollar index. It's rallied all week long, not because the dollar is strong, but because the yen and the euro are weak. It took off today right at 9:30 Eastern, and that's right when gold and silver started to really roll lower in the futures market. So keep watching the dollar. If you're wondering if silver futures are going to bounce back quickly, watch that spot price. If that spread persists and widens out to $2.50, $3 again, if the spot price lingers near 49 and 50, have a hard time selling futures down to 45, 44, 43. So watch that spot price over the next few days too, especially now the Chinese are back from holiday. But then lastly, I'm sticking with my forecast. I thought gold would go to 4,100 before it begins a consolidation again. I thought silver would go to 50 before it consolidates. Maybe that'll only last a couple weeks. But if it does last a couple months, 2026, man, they're telling you they're going to replace Powell. They're going to goose the board of governors with a bunch of very dovish Trump picks. Besson has said they're going to meld Treasury and Fed operations together. They are going to cut rates by 200 basis points, and then they might have to institute yield curve control if the bond market starts to sell off. And that would be extraordinarily bullish. And that for sure is how we get to 5,000 plus and well through 50 in silver. So that's some stuff in the short term, but boy, let's keep that long-term picture in mind.
Fantastic. Well, we really appreciate Craig Hemke, David Morgan, and Michael Oliver for joining us today, and all of you guys for tuning in. Historic day, fun times. We'll definitely keep tracking this with you all. Thank you so much, and God bless.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for October 6th through October 13th, 2025, while supplies last. First this week, 100-ounce silver Valcambi bars are just $2.79 over spot per ounce. Next, 1-ounce 2023 Mexican Silver Libertad are $6.99 over spot per ounce. Finally, 1-ounce gold Valcambi bars are only $85 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.